Welcome to the video. I am going to be discussing how companies performed over the last two market sell-offs, and the housing crash will be discussed first, and then I'll talk about the COVID sell-off and which companies were affected the most. So you can see here for the housing crash, AIG dropped 98%, and they actually had to get bailed out, otherwise that company wouldn't exist anymore. And you can see down the list, this one dropped, RF dropped 90%. I got about 700 companies in here. So I'm pulling the price data from the highest point before the sell-off of the S&P 500 in 07. You can see there, 10/01/07. And then the bottom of the market was February 09. So you can see that it dropped from 11.49 to 20, a 98% drop. And I'm going to be showing which ones were not affected as badly in the housing crash. So you can see here, 70%. This company actually kind of is something I've bought and put in my own portfolio before. But that one dropped 70% in the housing crash. That one has pretty good earnings per share right now. And let me speed it up so we can, okay, so this green here indicates that in the COVID sell-off, this actually went up. But you can see in the housing crash, it went down 59%. So people were getting food, pizza delivery from Domino's during the housing crash, so their stock went up. But it didn't in the housing crash. So it's going to give a little bit perspective. So I'm going to go down some more. We're at 38% here. 400 companies in, we finally get to 30%. So here, KR, that went up in the coronavirus sell-off. From the top to the bottom, that went up. Clorox, obviously, because people were getting cleaning supplies, but that sold off 17% in the housing crash. And so here are the companies that... you can see all the green here. These are the companies that went up in the housing crash. And you can see there's some commonalities. This company went up both in the housing crash and in the coronavirus sell-off. And then you can see these two treasury bonds went up for both sell-offs. So what I'm getting at here is you don't have to get short in preparation for a market sell-off. You can get long. See, the McDonald's went up in the housing crash. Gold ETF, another gold ETF. Netflix went up a lot, but it went from $3 to $5 in the housing crash. So now that we went over that, let's go look at the coronavirus sell-off. So COVID sell-off. And you can see that it didn't get hit as hard. Some of the hardest hit companies were up to 80%. But MGM is basically all the companies that are highlighted in red were the top 20 companies in the housing crash sell-off. So these companies like AIG, that was the number one worst. And it also sold 60% in the coronavirus sell-off. So to me, these ones that are highlighted red did very poorly in the last, like you can see that they did poorly in both recessions. All these four companies that are here, AIG, FITB, BCS, and you can go along these companies as well. So it made the RF made the top 106, but but in the previous sell-off, this made the top 20 highest sell-off companies of my like 700 that I have on my list. So to me, these companies could potentially be shorting opportunities if things behave as they did in the last two sell-offs for the next one. So Ross, you can see that it went up during the sell-off of the housing crash. So all the greens showed that the ones that went up from the recession previous. And these are the ones that made the top 20 from the housing crisis. So you can go down some more. SIRI. SIRI. That's Siri XM. So that's like a radio station. This was made money in the previous crash, but you can see right here it went down 35%. So not as optimistic in this crash as it was in the previous. It didn't do as well. And then see, Lulu made the top 20 in the previous crash, and it dropped 35% in the COVID sell-off. So you just go here. Garmin made the top 20 in the last one. McDonald's, that made money in the previous, but in the Corona sell-off, probably because they only were using drive-thrus, it would drop 30%. So, all right. So we're going to go to the bottom here. You can see some of the ones that did good in the past sell-off. So you can see not as many companies were in the green, and funds were not in the green as in the previous sell-off. So you can see this one went up in the last recession. But it wasn't as much. I don't know. AGN apparently went up 150%. I kind of need to do some research on what that is. But these went up, basically, in the COVID sell-off. And that's how much. So let's move on here. And, I also wanted to talk about the chart. I gotta, so basically, this is these are the companies that were hard hit in the sell-off. So it's all the companies in red that made the top of this list for the coronavirus sell-off. So basically MGM, AIG, FITB, BCS. So to me, these are possible companies that could be shorting opportunities. Now, you don't have to short. Shorting is very risky. I'm not sure if I'm going to do it or not because it's really tough. The timing is difficult. But due to expiration dates and things of that matter. But could be good opportunities. But like I said earlier, you don't have to be short. You can also look at the ones that did well in the previous recessions, like the bonds. And gold did pretty well in the housing crash. So I did put together a combination. So basically, this list is the average of the sell-off between the two different recessions. So basically, I took the sell-off of the housing crash and the sell-off of the COVID sell-off, added them together and divided by 2, basically. And these are the ones that made the list for like the top 50 or so here. So these could potentially be shorting opportunities as well. I can go down the list some more. And you can just take a look. If you want to pause, you can. But here are the companies that did decent in one of the recessions. I'd have to check to see which one. But right here, these could be your potential, the ones that you go along with, potentially. It's not going to be super profitable, but through the different slides that I looked at, you can take a look and see which ones were in the green, basically, the bright green, and do your own research and see if that's something you want to be long on, and if you have an expectation that a major sell-off's coming. And we're in a 13-year rally, so the Fed can't stop a correction. They can only delay. Treasury bonds are starting to increase, which will lead to less borrowing and less market stimulation, basically. So we're we're going to enter the decline. It's just it's a matter of when, and with options it gets difficult trying to time it. But that's something that I wanted to show. Just going back to the housing crash, these are the things that did well in the housing crash, indicated by the green, and also did well in the coronavirus sell-off. These. So those could be the ones you go long on if you want to have a mix between shorts and longs as we enter into this next cycle. We always go through cycles, so it's nothing new. But you want to be able to be prepared for it. So I hope you gain some value from this. I appreciate you taking the time to look at it, and catch you later.